Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades. And tonight we're going to go over all the trades that we made for today, September 29th. Plus, we're going to cover the trades that I completely forgot to add to the website. So I apologize, but thanks everyone for keeping me straight. That's why I love everyone so much, because you guys always keep me straight. You're like, hey, what about those Nike and UPS and HPQ trades? But everyone missed the NCR trade that we also sent out as well. So I'm going to cover those. Those are all of the opening trades that you see here at the top of the video right now. So all of these trades we made last week, so they are not trades we made this week. But if you can get the same or better pricing, then you can obviously get into these as well. Okay, so I'm going to go over all of these ones first since they were for last week. So the first one is in NCR, and although this is one of those ones that are vertical, we could have done a calendar on this one as well, but we like the idea of adding some calendars here for a lot of these things, kind of heading in towards earnings. So a lot of the stocks that we found that we liked, except for Nike, which actually had earnings already, a lot of the ones that we already liked heading into earnings, we think that we might get an advantage of playing implied volatility one way or the other as we get closer to the actual event. With NCR, what we did is added a debit vertical put spread. We went out to November and did the 34.33 debit put spread for about 50 cents, which is right on mid price. For NCR, there's one we haven't traded this year, but actually it ended up being a very good looking trade. It just had a nice little rally here heading into September and August, but then we saw a nice little divergence here and some movement down on the indicators, both CCI and MACD, where we've shown a bearish cross on both of those. So we're playing those a little bit. We do have that earnings event coming up, so if we do play implied volatility to the high side, which we can do heading into that earnings event, we could have a good opportunity of seeing NCR head lower and see implied volatility head higher, which would make this position really, really strong. But as always, we kept the position size small, just two of these, so a $100 bet on NCR. For Nike, this one's a little bit different. We traded a calendar Nike, the November, October. For all of these November, October calendars that we traded in UPS, Nike, and HPQ, remember that when we buy a calendar, we are actually selling that front month strike and buying the back month. So in all of these cases, we sell the front month option at the 90 call, and then for Nike, we bought the back month option for November at the 90 call. Basically, we pin everything around that strike price. So that's ideally where we want the stock to move in either scenario. And all you do is you buy the calls if you think the stock is going to move a little bit higher, or you buy the puts if you think the stock is going to move a little bit lower. So you're just kind of pinning it either above or below the market. Now in Nike's case, we went with the 90 call, paid a $90 debit on this. And the whole idea here with this one is that not necessarily that we have a rise in implied volatility, but that we actually see Nike just stabilize after earnings. So we left ourselves a little bit of room for Nike just to trend a little bit higher towards 90, but ideally what we want to see happen is the stock to stabilize after earnings. Let me just get these studies out of here so you guys don't get distracted by those studies. But you'll see that a couple times before in the past that after earnings happens for Nike, it tends to move sideways for the better part of a month and a half. And that's really what we're playing here, is about the sideways to upward movement in Nike for the next, kind of 20 to 30 days, and see if we can't get a little bit of decay between the two options that we bought. Now, because this was a very high priced calendar that we bought, that also means that we have very wide break-even points on this calendar. So here's a look at what it looks like right now. You can see our break-even on the bottom side is about 87.25. On the top side is about 92.75. So we've got a very wide window of opportunity to make some money on Nike. You can see 87 is down here, and about 92 is all the way off the chart, but really up here. This is kind of our profit window in Nike. So even though we wanted around 90, that's ideal. It can actually move kind of between 87 and about 92, and we still make some money at October expiration for Nike. Same thing with UPS, very, very similar with UPS. We bought the Nov October 92.5 put spread, so we want UPS to head lower. Again, just trying to balance things out here. So with UPS, we'd ideally like to see the stock move to around 92.5. My cursor and mouse would work. You can see that it's had a really, really tough time after the last earnings, and if it continues to head lower into earnings, we could see implied volatility definitely jump up in UPS. So this one's a little bit different than Nike because we're considerably lower. So here's 93 down here. We're very, very bearish on UPS. We think it'll definitely head lower into earnings. And so we're playing this thing a little bit out of the money, but we also got a little bit cheaper price. So unlike Nike, which is right here in the money, UPS we're playing definitely to the downside, so a little bit less money invested in UPS and definitely a higher return on our capital if we are right in this trade and it heads toward 92.5. But ideally, UPS is trading right here, right now, just above 97. You can see our profit window is definitely lower than that and absolutely centered around 92.5. But a very big profit window, it can go down to about 88.5 and all the way up to about 96. So as soon as it starts heading below 96, we actually make money on this trade at October expiration with UPS. So even though our first strike is our strike for the calendar centered around 92.5, we actually make money below this line. So we're a little bit bearish on UPS for sure. We definitely need it to move lower. If it does move below 96, then it's all going to be profit up to 92.5. All right, and the third one that we traded this calendars is HPQ. So we did the 34 puts on HPQ. Again, that targets the profit and the kind of the pyramid shape of that calendar around 34 on HPQ. Paid a small debit of around 27 cents for HPQ. Same thing with UPS. We anticipate that it's going to go much lower than here, so we're not as bullish in HPQ, but we definitely think it's going to head lower. We'd like to see it head around 34, and you can see that this one is already well in the money right now, so even if it expires right here, we still make some money. We've got room for this thing to go up to about 36.25, and we still make money, and down to about 31.75, and we still make money. Everything centered though around that 34 strike, so very wide window here on HPQ around 36 and 31. You can see very wide window on HPQ and definitely tilted towards the bearish side. So we think that if anything, it's going to trend lower. It can rally up to around 36, but we don't want it to go too much higher than that. But generally, we want to see the stock just continue to kind of slowly fall and glide lower as we head into October expiration. Okay, so those are those trades that we made last week. All right, so the new trades that we entered into today, the verticals on the X and EWZ. Now, both of these have very similar concepts, and I actually just went over this with our premium members on our weekly strategy call where we kind of talk about the week in advance. We go over the entire portfolio, what trades we're looking at, and then we break out new trades and then trades that we're currently in with adjustments. So these adjustments that we made in X, which is US Steel right here, and EWZ are both continuous, I guess, kind of same adjustments that we've made before in the past where we're rolling down one side of the trade that the market is moving away from and continuing to add credit and build up this credit in these trades. Now, these are definitely our two biggest positions that we have in X and EWZ. And rightfully so, because I think they're great opportunities. So I still want to invest heavily in them, and that's why we invest so little in everything else, because if something goes against us, then we can plow a little bit more money into it, defend the position to actually turn a profit or at least reduce our loss. So first, with US Steel, by way of a vertical spread, what we ended up doing was closing out of our 43 calls and rolling those down closer to the market to 40. So again, you can see all we did was roll down our call side closer to the market. Now, logistically, what this looks like is a vertical spread, because in a vertical, you are selling the front strike and you buy the back strike. Well, we already were short the back strike, so buying that back strike back closed out of our 43 calls altogether. And basically what that did is took in a net credit of 145 on that roll. So that took in a net credit of 145 on the roll, and that really helped kind of increase our overall credit on this. Now, remember that by closing out of these 43 calls, we actually banked a profit on those 43 calls because X has continued to move lower. So as we take in credits, we are banking profits on the backside of this trade. So if we go to the chart here of X, you can see it's pretty amazing, but the stock has completely reversed the big news that it had from before, and now it's trading back down and below where it was at pre-announcement that it was filing for bankruptcy, which could have been seen as a good thing, and that's why the stock popped. But you see that actually as the stock continued to head lower, we closed out our 43 strikes, which were here, line in the sand, and we rolled those closer to the market. So we took a profit on those, absolutely banked a profit on those. That kind of goes in the piggy bank to offset everything else for now. And then we rolled closer to the market so that we have more exposure in case the thing continues to move lower. So this is the whole idea here, and this is why people mess up adjustments all the time, is because they add positions below the market as the market's running lower. And in this case, if you would have kept adding positions below the market, even as the market's lower, you would have been losing on all of these different trades. What we're trying to do here is be selective in what we do and add more positions to the top side of the market so that if US Steel continues to move lower, then these things continue to bank profits all the way down, okay? And we're not touching the other side too much. So that was the whole idea with US Steel. EWZ is very much the same thing, except we didn't roll anything just yet. We had working orders to close out one of our further up call spreads. So the 50-51 call spread, we had a working order to close that, just didn't get filled. So it actually wasn't a roll, it was an adjustment and added another call spread to this side of the trade. Basically what we did there again is trying to roll down the call spread. We just didn't get, we tried it in two separate orders and got one filled and didn't get the closing order filled out. So hopefully we'll get that filled out tomorrow so that we just kind of neutralize our margin exposure. If we close out one call spread, same with the strikes, which is $1, and also close out one call spread with the same number of contracts, which is 5, which is what we're trying to do, then what that does is that neutralizes our margin exposure, gives us no additional risk in the trade by making this adjustment. All it does is reduce our max loss by the credit that we received, which is 29 cents. Okay, so that's exactly what we did in this trade, and what we're trying to do is just added this call spread above the position at 46.47. It's pretty amazing again what EWZ has done over the last month and a half, just gone straight down. So what we've done is just continue to add trades like the 46.47, the 50.51, which is now profitable. We even had trades up around 56.57, which again still profitable. So we're just going to keep adding call side trades to this thing and continue to move with the market. If it continues to move lower, we'll continue to add call side trades and move and adjust these positions lower, taking in more credit the entire time. Okay, so I know this was a little bit longer of a video, but we just had a lot of stuff to go over. As always, if you guys have any comments or questions, please ask them in the comment section right below this video. If you're watching this video somewhere else online or on YouTube, you just have to understand that these alerts and this video that you're seeing right now actually comes out to you guys about 15 days after it goes out to our members. So if you want to get real-time alerts and this nightly video every single night after we make trades, you got to sign up at optionalpha.com. As always, happy trading.